Good morning, everyone, friends. Thanks for joining again to our knowledge session. Your all support give us more and more power to conduct this kind of seminars and webinars. I will like everyone, as I said, to be actively participant. Ask any query, any questions you have, problem you have in this webinar. It will be more interactive. As we say, we are not the expert, but we are like other colleagues. We are sharing. This is for sharing knowledge and sharing the experience this platform is. And we are very happy for all your continuous support. Today, our topic is our, of course, new report which has come. And today to discuss this with us, we have two panelists, our friend, Mr. P.C. Agrawal from Aurangabad is a past chairman of Aurangabad chapter of WRC of ICSI. He's become LLB, CAIB, and FCS. He has experience of over 40 years in various organizations, including listed, unlisted companies, and also Bank of Baroda. He retired as VP Corporate and Company Secretary of Aurangabad Electricals Limited in October 19. Now he's a practicing Company Secretary. He is registered as a peer reviewer. He is also one of the faculty member of MP Law College, Aurangabad, and Aurangabad chapter of ICAI. Welcome, Mr. Agrawal.
Thank you, madam.
Another panelist, Mrs. Nidhi Pillai, is an associate member of ICSI, LLB from Indore University, and diploma in business finance from the Institute of CFA of India, with 20 years of post-qualification experience as company secretary in employment. She is currently working as Deputy General Manager, Legal and Secretarial of Endurance Technologies Limited, a listed company based at Aurangabad. She has served as a chairperson of Internal Committee, constituted under POS Act, and she is a certificate holder for the POS. She has completed Signature Edition 4.0 for 7 Habits of Highly Effective People. Welcome, Nidhi.
Thank you, Dipti. Thank you. Good morning to all of you.
Good morning. Nidhi, today I'm in Indore, only your when you have passed, and welcome both the panelists to the topic. And as you know, this all amendments, we would like to say that many things is suggested, which is really found to be supportive to the ease of doing business. Of course, we always need with ye dil mange more. We always ask more, but whatever is starting, let's take it positive. Let's see how the impact will be, and it can be. And with that, I'll request both the panelists to give your view, and then Mr. Bala on the topic for 2 minutes each speaker, and Mr. Bala, and then presenter Jasveen can start the presentation. Over to Nidhi first, and then Mr. Agrawal, please. Thank you.
Thank you, Dipti, and thank you for introducing us to such great friends of yours.
Dipti, you have to introduce me also. As your office audience.
Sorry. Pramod bhai.
Say that to Dipti, yes.
Yeah.
So, I have introduced myself. Pramod Shah, former council member for 9 years, former chairman of WRC, founder member of CCGRT, and now in practice engaging 45 people with us, and we are proud of Dipti and Atul bhai. They have been doing good, excellent work in spreading the knowledge, apart from having a large office, but they always want to other people to learn something, and we appreciate their efforts, and I do the same thing. My one article in the last issue of the Charter Secretary appeared on the cooperative laws, which you can go through at your convenience. Thank you.
Thank you, Pramod bhai. Thank you to be on this platform.
No, not at all. We are proud of you, and we are part of you only. There's no question.
Thank you. Yeah, Nidhi, please.
Thank you, sir. And it's really great to know. It's a very opportune platform to know such great faculties around us and great people. So as Dipti has said, the platform, it is very essential because all of us are working in different sections of corporate laws. And the committee, as you can see, if somebody has read the report, it has covered a very wide arena. So the first thing that has been done very suitably is aligning with various other laws, because as company secretaries, we always face this problem of SEBI not being aligned with Companies Act, and various, and sometimes even small things as certain errors and figures missing. So all these things have been put here, as well as ease of doing business is something that this government is really focusing on. And we can, as we read through this report, this is one area, this is one focus area that all the panel members of this, all the committee members had in mind. And they have really given very practical solutions to all these issues. So I really hope these amendments sail through and they come up. As Deeply rightly said, we are all so much used to amendments now in Companies Act, and then clarificatory orders and everything. So another amendment, but really the suggestions are very practical, and if they are put into force, especially those relating to electronic registers and Iepf, I think it will be really easy for us as company secretaries also for proper compliance, I would say, in all areas. So over to Agrawal sir now, please.
Thank you. Thank you, Nidhi.
Thank you, madam. So thank you very much for our nice introduction and giving us the opportunity to express our views on this. So actually this report on Company Law Committee report that has come in the month of March, and this time they have covered many new areas. In fact, earlier they had try to simplify the penal provisions, decriminalize the provisions, converted the fines into penalties, we all know. Now this time they have introduced, they have suggested certain new areas like SPACs, for example, special purpose acquisition vehicles, or even fraction shares, or wholly owned subsidiary can have only one member. So certain new things have been introduced, suggested in this report, and it is hoped that they will all see the light of the day, and let us hope for the amendment bill soon in this. Thank you very much.
Thank you. Thank you, Mr. Agrawal. Mr. Bala, please.
Since we are going to discuss the various amendments in detail, item by item, I will not touch upon on that. But the only thing is, it appears to my mind, whatever the recommendations which have actually come from the committee, it all appears to be very, very ambitious recommendations, and having in mind some of the best global practices, and also more towards of achieving digitalizations, and also ease of doing a business, which is this government is aiming at all the time, which they've been talking about it. And there are issues we are facing with the SEBI, harmonization between the Companies Act and the SEBI regulations. Because very recently SEBI has brought out a lot of regulations relating to independent director, cooling period of appointment, etc., and other thing and all. Those issues also being addressed in these recommendations. So they are trying to harmonize these regulations here as well. And also they are working out something like a framework for the statutory auditors, which is also actually coming up here in this. So as we go along, I think Jasveen is prepared very nicely a presentation. She has done an excellent job. I think you will appreciate when the presentation actually goes on. So one by one we will see, and it will be a great things if all the people interact and express their opinion, etc. Because when the recommendation goes through, then again public opinion will be called. It is not going to take effort immediately, because it will be again discussed. Committee will go through it, and again it has to go in the Lok Sabha, and it has to go to the Rajya Sabha, and finally getting the president's assent. It is a long way to go, but one thing is there, definitely if these recommendations are accepted, it is coming. It will definitely having a far-reaching consequences in our country, in our economy. It will do good, especially for the professional people. I definitely feel that. That's all. Over to Jasveen. You can start your presentation, please.
Yeah, Jasveen.
Thank you. Thank you so much. I'll just share the screen.
Yeah, please.
Is it visible to everybody?
Yeah.
Yes, Jasveen.
Okay, thank you. Thank you so much. So yes, deliberations on the report of the Company Law Committee 2022. So the Company Law Committee, which is the CLC, presented its report on March 21st, 2022, wherein they have suggested certain amendments and clarifications in the Companies Act as well as the LLP Act. This is the third report of the CLC that was set up on 18th September 2019. And the chairman for this committee is Shri Rajesh Verma, the secretary of Nclt. Now let us understand what are the objectives or the broad objectives of this report. First is the ease of doing business. This has always been the objective of the government, and the panelists have also said that in their opening remarks, that ease of doing business is something that this government has focused upon. So this report introduces concepts such as producer LLPs, etc., which actually provide ease of doing business, but only to law-abiding corporates. So they've been very cautious about that part. Second is recognizing new concepts. So concepts such as restricted stock units and stock appreciation rights, which actually did not form a part of Indian Companies Act, have now been recognized by this report. Third is to expedite corporate processes. Specifically for the restoration of the name of the company in the register of companies, once the company is struck off, that process is being sought to expedite. And the process is now simplified to that, or that is the recommendation in the committee report. Fourth, reducing compliance burden on businesses. So like it is said, again aligning to the ease of doing business, good corporates and compliant corporates should not be burdened with a lot of compliances. And to that effect, there are certain provisions under the Companies Act which we have recommended should be transferred to self-declaration mode rather than the affidavit mode that is followed now. Moving on, aligning Indian laws with international best practices. This committee has been specifically conscious about the laws in international jurisdictions as well, and have recognized concepts such as special purpose acquisition companies, maintenance of digital records, etc., and have attempted to bring it into the Indian Companies Act as well. Thereafter, sixth point, ensuring good corporate governance. Good corporate governance has again always been at the top of the priorities of the government, and practices such as risk management committees or setting up of risk management committees in certain class of companies that are unlisted is also proposed to be introduced. Reducing ambiguity in interpretation. So there were several provisions under the Companies Act where there was an interpretational issue or there was a deviation in interpretation of the same. This committee has actually clarified such provisions so that there is no deviation as regards the interpretation. Moving towards digitalization. So after this COVID lockdown, we have all learned to live with the digital era now. And recognizing the same concept, a lot of concepts have actually been shifted to a digital mode as per the recommendations of this committee, which is a very welcome step. Last and the most important, strengthening NFRA and audit framework. Audit and auditor, the manner in which audit and audit is carried out is really important for a company, especially with the number of frauds that have been recognized in the past era. So taking regard into that, the committee has recommended to strengthen the NFRA and provide specific formats such as a specific format by the central government for observations or qualifications by the auditors has also been recommended. This is just a gist of all the amendments that has taken place. There are 26 proposed changes to the Companies Act and 1 to the LLP Act. I'll be taking up each one by one and in great detail. So the only amendment to the LLP Act is of the producer, new concept of a producer LLP. Okay. Under the recommended amendments under the Companies Act 2013, first is section 2, subsection 41, which relates to financial year. So subsection 41 actually states that a period from April to March will be regarded as a financial year for a company. The first proviso to this section states that if any company wants to follow a different financial year, because say it is a holding subsidiary or associate of a company incorporated outside India, and for the matter of convenience, they want to follow a different financial year, they can actually do so by making an application to the central government, which is delegated to the RD. So this provision already exists under the Companies Act. Now the recommendation of the change is that they intend to introduce a provision for companies to actually revert back to the Indian financial year once they cease to be associated to such foreign entity. This was actually a loophole wherein conversion from Indian to foreign or any different financial year was already there in the Act. However, reverting back to the Indian financial year provision was missing. So they have filled in this gap. And there are also chances that this would, right now the central government is recommended to have the power to revert back. However, there are chances that this will get delegated to the RD, since the original, under the first proviso, the power is to the RD itself. Any comments from the panelists on this amendment, proposed amendment?
No, I think this was a well-awaited amendment, and that will sail through easily because that's just a loophole, as you rightly mentioned.
That has been the demand. People were looking forward. It will definitely help in doing a ease of business. People will be able to do it. As you rightly said, if it is dedicated to the body, that will definitely facilitate. It will be good.
My only point in this case is that we should not be restricted to only the case when it ceases to be holding or subsidiary. It should be left open to the company for whatsoever reason. If they want to switch to the financial year, then they should be allowed to do it.
Yeah, that is, you're saying instead of having a class of companies, it should be open to all the companies.
Yes.
Mr. Agrawal, could you have a little bit more light on your face? We cannot see your face; it's in darkness.
I see.
Somehow, I don't know.
I'll put off that light.
Yeah,
Is it visible, sir?
but still you're, I think, curtain. Yeah.
I think this is better. Yes. Sorry to bother like this, but
No problem.
we understand better if we see everybody.
Yes, sir.
Yeah, lovely. Thank you. Thank you.
Abhi surf ka brightness aa gaya.
In this situation, you know that one of our client has changed the financial year due to holding company overseas. They wanted to revert back to current year financial, again Jan to March, but and they applied also to RD, but RD rejected. They said nothing doing, you can't do under which provision you want to do that. So what Mr. Agrawal was telling, you know, the company should be allowed or as such difference here. But I think there again comes the situation that how the company manage the accounts, there can be structuring of the accounts and all that. Maybe the situation, the possibility and of misuse for structuring or otherwise, maybe that restrict them to amend, or I don't know. That is.
So actually the committee had also received representation by way of an intimation, because actually we're just reverting back to the Indian law. So, but the committee decided against it and said, no, you will have to file a fresh application to the central government for this.
But they allowed only if you get ceases to disassociate.
Right.
But you are still associated and you want to change.
Yes, for administrative convenience or whatever reason, if you want to change, then that should be permitted.
That is not allowed, because then they were required to file everywhere to accounts and lot of explanation. So they said leave it, rather for holding we'll keep separately. Now we'll go back again, but they were not allowed. Yeah, go ahead.
Okay. The second proposed amendment is to section 20. Section 20 basically states that how can a company communicate to the members as well as the ROC, and what modes of communication would be regarded as an effective communication. Now there is a proposed amendment to this wherein the committee has said to introduce specific provision enabling the central government to prescribe rules for a class or class of companies that can serve documents to its members, certain documents, but that shall also be prescribed. So certain documents can be shared by such class of companies to its members only by electronic mode. However, they have also been very cautious to ensure to safeguard the interest of investors who do not have demat shares or their email IDs are not registered, making the electronic service a little bit difficult. And if a member requests for physical documents, then he shall be provided the same by the company. Again, under the proviso to section 20 subsection 2, it states that if a member requests for delivery of documents through a particular mode, so if he says that I want to receive it, say only by, say suppose DTDC post, etc., whatever, as the case may be, then for that service, the member would have to pay a fees that would be determined by the company. Earlier, as on date, the provision is that this fees can be determined by the company in an annual general meeting only. Now it is proposed to change this to any general meeting. So the company can then decide the fees in any general meeting. This is more of a COVID-related amendment wherein during the COVID lockdown period, everyone was scared to receive physical documents, so electronic service of documents used to happen. So now they're extending it and ensuring that companies are allowed to do the same.
So
This is indeed a welcome
Yes.
provision, I would say.
Yes.
Right.
It's just that, as many of us would be aware, we have a few shareholders who really like to hoard documents. That we keep on receiving requests for documents. So in such cases, the fact that they have enabled it, they're suggesting to enable it through any general meeting to decide that fees. So I think that's only once in a lifetime of a company that somebody decides a fees. So that's more of ease of doing business and connecting it to digitalization. And there are enough and modes available now through RTA or on the company's website itself, where such things can be enabled. So I think once, if we see these days, the SEBI, after it has released certain circulars, recent circulars, where they are stressing upon updating of KYC requirements, the gaps which we find, even in case of physical shareholdings, the shareholders have their email IDs registered. So once that is in place, this thing I think can be easily implemented by the companies.
Jasveen, the proviso which you have says that if you may request for delivery of any document for which he shall pay fee. Now, if I want the annual the annual report in hard form, the company may ask for fee, is it? Could ask.
If you ask it only through a particular mode, otherwise they would have to deliver, serve the document any which way. The company has to serve such document upon its shareholders and members rather. But if the member says, I want it only through this mode, whatever the mode may be, so for that, they have to pay a fees.
No, the company is normally say giving it by way of an email, okay, to the email ID. But I want a hard copy, and I tell the company that I want a hard copy. The company can the company then come back to me and say, no, you have to pay 50 rupees for this.
No. It has to be allowed.
But
so
then
that's a right of a shareholder, actually.
No, but see the proviso. Member may request for delivery of any document through a particular mode. By particular mode, I mean hard copy mode,
Yes.
for which he shall pay fee determined by the company in AGM or any general meeting. This would mean that I may be asked to pay.
No, sir, that usually kicks in case of provisions where after an inspection of records of the company, as a shareholder, you want certain copies, so say of register of members or register of contracts. In such cases, the company, if it decides so, which usually is not the case, but under law, company is entitled, it may ask for fee, but the certain things that the shareholder is entitled to receive by way of particular mode, such as annual report or quarterly declarations and all these things, in which case they don't have to follow the process of inspection. In such cases, the shareholder will not be required to pay fee.
So in the case of annual report, this is not applicable,
Yes.
because the Act already provides for that.
Yes,
It has to
yes.
be provided in physical form if asked for by the shareholder.
No, but this particular amendment is rather sweeping in nature. It says that you may send everything by electronic mode unless the person asks for it. And if the person asks for it, then the proviso says that you may have to pay a certain charge as may be determined by the company in general meeting. Therefore, I conclude from this that even an annual report, the company could say 50 rupees.
Sir,
No,
it is,
probably when the rules comes, I think this will be
Yes.
made, because thing is, you know, as a matter of right, you are entitled to receive your annual report, board report, and notices and other things and all those things. Electronic mode is only for the facilitations. Especially if the senior people like that, they cannot say that we will charge you or something like that. That will not be the case. As Nidhi said, anything arising out of, you know, particular situation or taking an inspection, or you want the specific documents from them, then in such case only probably they might charge the thing. That's what I think.
sir, this charge is not for the document, but
Yeah.
only for a mode, particular mode.
Yeah,
More.
because
Okay.
Yes. So adding to that, we also have a rule 11 for financial statements, rule 11 of the accounts rules, wherein they say that otherwise you can do it through electronic, but if a particular person wants it delivered physically, like you said in the example, then in that case, any service under section 20, which is speed post, etc., any service recognized under section 20, you cannot charge them for that. It's only for those modes that are not recognized under section 20.
Okay.
Now for suppose they want the Blue Dot Express only,
ah,
when a shareholder is located out of India, they will charge, no? That
Right.
Okay. So let's carry on. Thank you.
Okay. So the next amendment is recognizing the issuance and holding of fractional shares. As on date, the Companies Act does not recognize fractional shares. Specifically, section 4(1)(e), which is the subscription clause to the MOA, states that every subscriber shall hold at least one share. So there is no concept of fractional shares as on date. However, by way of this amendment, the report, the CLC actually recognized that the issuance, holding, and transfer of fractional shares for a particular class or class of companies should be allowed. These fractional shares should be maintained only in dematerialized form, and the committee MCA would also have to consult with RBI for listed companies, issue etc. fractional shares for listed companies. The other important point is this is allowed only for fresh issue, which means I can go ahead and issue fresh fractional shares. However, these cannot be as an outcome of the corporate actions. So say in case of a merger, there are the ratio is such that a fraction appears of the shares that cannot be issued and traded, or rather held by the members. This is only for fresh equity shares. The aim of this, yes,
Bonus shares.
No corporate action, sir. Only fresh equity shares can be issued.
No, in bonus shares you may get fractionals. No, sometimes if the ratio is odd.
Right. Yes, but that would not be covered here.
That would
We have
not be.
specifically excluded that. Yes.
Okay. Thank you.
Merger, buyback, bonus, all of that is excluded. It's only by way of fresh issue by the company. The purpose of this amendment is to allow retail investors to hold equity shares within their budget of companies whose share prices are quite high. So something like a blue chip company whose share price is generally quite high and retail investors cannot afford it generally. But by way of these fractional shares, it would be more convenient for such investors to invest. This also aligns Indian company law with the practices followed in Canada, Japan, and USA, where such fractional shares are already recognized by their company law.
So it is a good move actually.
interesting it is.
Yeah, since all these will be in demat form only, so there should be no practical difficulty in implementation also. So it will be in the interest of the shareholders. It's a good.
Right.
Yeah.
I think, sir, they should allow corporate actions as well to actually let the investors receive the benefit of this.
Yes, and
For example, if I want to buy MRF, I can't buy MRF.
you can't buy MRF.
Secondary...
After this amendment comes, you can buy fractional.
It doesn't appear that it can be done through secondary market purchase. I'm not sure about it. That's what I'm saying. So
as sir also mentioned, if corporate actions are included, because fractions usually arise a lot due to corporate actions.
Correct, correct.
Yes.
And
And
corporate
especially-
action also only in case of listed companies. I don't know why. They have said in case of listed companies, corporate action, fraction shares will not be allowed. Only fresh issue they will consider.
Maybe they have to put in place a mechanism for that. Maybe I don't know the thought process behind it, but only fresh issue. I don't know fresh issue whether how many companies in recent IPOs have been such high value shares that fractional would be required. I think they should include corporate actions to actually achieve benefit of it.
Yes.
Maybe they may be trying to say with the fresh issue, and then they will give how it comes, they will allow it corporate action.
Looking to the experience, yes.
Not only that, the recommendation might also see the final shape later.
Yes,
Yeah.
We
yes.
can't say
Good
that.
question.
Yeah.
There's a
Yes.
question. There's a
Very
question
good
that has
question.
popped up regarding voting in case of. So, I think once the rules come out, that will have to be assessed.
Right. Clarity would be provided in the rules.
Yes.
That to that. Can I move on?
Yes.
Yeah.
A very important amendment, issuance of recognizing the issuance of restricted stock units and stock appreciation rights. Let me first explain what RSUs and SARs mean. RSUs, restricted stock units, specifically mean a scheme wherein an employee is entitled to the shares at the end of a vesting period, but subject to certain conditions relating to duration of employment and performance that have to be met as per the scheme document. The difference between ESOPs and RSU specifically is it is not an option. RSU, it is an entitlement, and RSUs are issued at a par. SARs, which is stock appreciation rights, refer to an incentive given to the employees due to an increase in the equity shares, the price of the equity shares of the company. So at the time of issuance or calling out of the SAR scheme to the date when the SAR expires, the difference between the price of the equity shares of the company during this time is given as a benefit to the employees, which can be either in the form of cash or can be in the form of shares. As on date, the Companies Act recognizes only issuance of ESOPs as an employee benefit under section 62(1)(b). However, now as per this amendment, they are willing to, or they are recognizing the concept of RSUs and stock appreciation rights as well. The interesting part is SAR already is recognized under SEBI share-based employee benefits and equity and sweat equity regulations. RSUs is not specifically recognized, but it is covered under general employee benefits under those regulations. So this will kind of align the practices, the SEBI as well as SEBI regulations with the Companies Act. The motive of this is to enable unlisted startups to provide benefits to employees. Why specifically startups? Because generally they're not able to afford as much benefit to employees or remuneration. So this is an employee benefit scheme that they can introduce for their startups employees. Another specific point stated is cash SARs would not be covered in this issuance. This has also been the practice under the SEBI regulations, wherein SEBI had issued certain informal guidances to Saregama, Mindtree, etc., wherein they stated that cash-based SARs are not covered under this framework. When I read this, I had a question that came up to myself. That is, why are other employee benefit schemes not covered? Though the SEBI regulations actually recognizes a number of such benefits other than the RSUs and SARs, but why has this committee only included RSUs and SARs and ESOPs is already existing? So why not the other benefit schemes, employee benefit schemes?
Namely, what are you referring to? What schemes?
For example, ESPS, employee stock purchase scheme is there.
It is covered, no? And SEBI has covered it, no?
SEBI has covered.
Right, SEBI has covered it, but the Companies Act.
Government has not covered. Okay.
Yes.
Companies Act it is not.
In this recommendation, that is not come.
Yes.
Yes. So the SEBI Act, SEBI regulations does have all those, but
Yes.
here they are not covered.
Yeah, we don't. And your question is why not?
Yeah, that is right.
Yes, right. Why not?
Why not?
Why not the other schemes as well? Why are they just restricting this recommendation to RSUs and stock appreciation rights?
So yes, it's a good amendment, good. But only point is, as you have pointed out, it's better you cover all the schemes as per SEBI regulations. So then it is a good amendment for.
Right. Easing the requirement of raising capital in distressed companies. Section 53 of the Companies Act deals with issuance of shares at discount. Sorry? No. Okay. So the CLC 2016 recommendation already made an amendment to this section, wherein a subsection 2A was inserted to allow companies to issue shares at a discount under the resolution plan or debt restructuring scheme under the RBI framework. Now they extend this and make another recommendation to allow distressed companies to issue shares at a discount to the central government, state government, and other class of persons as may be prescribed. So they've also gone ahead and described what a distressed company means as per their understanding. It means any company having cash losses other than the depreciation, etc., for previous 3 consecutive years would be regarded as distressed companies as per their understanding of the CLC. The important part over here would be of the registered valuer to actually calculate the discount to be given. And the motive basically of this amendment is to allow the government to inject capital in companies involving public interest. And it would also help companies to revive post the COVID-19 pandemic. The points over here that are to be seen once the regulations come in, the rules come in this regard is, would they allow something like a vulture fund to actually invest in the distressed companies as well, as is the prevalent practice today in the market?
Bala, I have a basic question here.
Yeah.
What is it that has in the past prevented issue of shares at a discount? Why is it prohibited? What is wrong in issuing shares at a discount? Like, for example, in USA, no, in India, issue of shares at a discount comes because we have got a par value of shares. In USA, there is nothing as par value. So there's no question of issue at discount or issue at premium. What is it that basically is the reason for not allowing issue of shares at discount? Is my question clear or no? I think.
Yeah, your question is very clear, because you are talking why the share cannot be issued at discount when they are issuing at the premium.
Yes, when the company is doing badly, it requires funds to recover. It can issue a 10 rupees share at 3 rupees, and some people will invest. The way you determine the premium of 100 rupees or 200 rupees, here you determine discount of 7 rupees. There are ways and means of doing it. So what is it fundamentally that that prevents issue of shares at a discount?
Even in this recommendation, they have not given blanket permission.
Correct.
They are saying to such class of persons as may be prescribed.
Prescribed as may be. Why?
So government will decide that.
Why is it so? Why cannot you give just allow the issue of shares at discount? Really?
Yes.
Price to be properly determined by valuers, this, that, etc. All that stuff.
So there's one reason that I can think of.
Yes,
that
please.
is, it will be very convenient for then the promoters of the company to take their own shares of the company at a good discount value and keep on increasing their stake, and thus affecting the minority shareholders. That could be one of the reasons.
Good point. But since the issue price would have to be determined by a valuer, registered valuer, his license would be at risk. And he could face strong strictures, because this would become a scam. And then the valuer will be questioned very strongly.
But let's say that even the valuer profession is not yet so settled as on today. And that can be the reason, because even the premium as on today, let's accept valuation is always a questionable issue in India.
But Jasveen, just flipping your question a little bit, one could even argue about that for premium on shares. Instead of a premium of 80 rupees, you give a
Exactly,
premium.
I told Silas by even the premium is questionable. I
Yeah,
said
even
that
the
I was
premium is questionable, correct?
That's the
Yes,
instance we see every day rather. Every IPO that is coming up, it's not
Yes.
keeping up to its, all of them are not keeping up to its, that's why SEBI has made those disclosures that there are so many IPOs which are now trading below at price below the listing price. So, and as Dipti rightly mentioned, valuation is a questionable practice, because usually DCF is adopted. Now those are projected numbers. They can always say that what we projected in this financial year, there are so many geopolitical issues which have now really turned around the base assumption. So no, even the valuer will not be affected in such case.
and
And
it will. Yeah, please. Sorry.
But Ms. Pillai, what you say about premium equally applies to discount. So
I
why
agree,
this,
sir.
why this prejudice against discount?
I agree, sir. I agree, but I don't really
It's
have
like
an answer for
discount
this.
is, I think discount is taking a free of charge certain property, and here you are selling at an extra price. The difference is that.
At least the premium is above the par value. Discount is going even below the par value. That is the difference.
I think the things will improve as there is proposed, amendment is mentioned. There is a proposal that a bill is there that will be separate institution for valuers, and then this profession is settled. I think it will be.
And all this arises merely because we have par value. If we did not have par value at all, as in USA, this would not be there. This question would not be there. Anyway, please carry on.
Maybe sellers by.
Yes.
And the valuer profession settled, and we have that stringent disciplinary committee and all that.
Yes.
It will improve. What you suggest, it can come up.
You
When
mean to
our
say that-
valuer profession is quite settled.
You mean to say in future we may have no, the par value will go away? On
Yeah.
Huh?
Why we should be concerned? We require this profession to evolve. It is not actually what I say, even settled. It's just in a piece bit, merchant banker, then CA, then IBBI registered valuer. Where is the situation of valuation? We provide valuation only of assets of company. Where about the gold or software? We have any system of software valuation or goodwill valuation settled, which gets some, assurance. What about the diamonds and all that? This industry, how the valuation does? What is the situation as on today valuation industry? It is a separate profession which requires a lot of depth, which is missing as on today.
And it's quite a subjective topic of valuation, because one person might have one approach or thought process, the other
It requires a scientific approach.
But it is evolving. It is evolving. That is right. I do see, like recently one of my colleagues is undergoing a valuation course sponsored by CA Institute, and the kind of stuff that they are offering there, it's quite interesting. So if I think things are standardized in future, we might see a much better scenario, and could get answer to a lot many questions as Sir is raising right now. But as far as this amendment is concerned, they are allowing to issue shares at discount to central government or state government. I don't know whether it actually gels with the industry policy, where they're now undergoing disinvestment of their existing holdings.
Nidhi, this is for bad bank they are doing, no? Bad bank is set up.
I know, but
so they government, if they want, if they feel it is of the national interest, the company, they may take the right and infuse the fund to protect the industry in the national interest.
But
so
in
I
such
think
case,
it's a welcome move, and it should be allowed.
But in such case, the founder, the promoter should continue to have that stake. I mean, because otherwise, once he comes out, there'll be no professionals or there'll be no person to run the company. I doubt if a government can take up and actually handle such things.
Again, Nidhi, it's a long way. Again, it's a case to case.
Yes.
When it is distressed, how it will be, because maybe in one or two cases it will be genuine. In another case, there will be failure. Like it's a IBC company.
Yeah.
So looking at that, how it evolved, it will come up. But we can't make general statement as such. They may observe how it will move and then they will think. Like they first allowed all promoter, then they bring in IBC that no, that promoter is not allowed, and they brought out section 29A. Then again, they understood that in MSME people will not be there. They have many issues. So they relaxed in their case. So maybe it's evolvement.
Yeah, that's
that's why
going to evolve.
And that's why we have so many amendments, so many committee, and that's why so many webinars, and we are discussing here today.
Yes.
Can I add something?
Yeah, please.
Yes.
There is a talk going on between the government and the Vodafone India. So they are converting that to equity, and there may be a reason that committee has proposed the discount of share to such distressed company that like BSNL or Vodafone India. The government may infuse some funds at a discounted price.
You're referring to the ADR dues, I think.
Sorry.
The ADR dues conversion into equity,
Yes,
right?
yes.
For telecom.
Absolutely right. Yes.
Right. May I go on?
Yes.
Yeah.
Yes, please. Yes, please.
Replacing affidavits with self-declarations. So certain sections that required affidavits to be submitted to the by the companies have now been converted, or proposed to be converted rather, into a self-declaration kind of a mode. Some of these sections are section 68(6), wherein a declaration for solvency was to be given at the time of buyback. Then 374, that is conversion of partnership into companies. Then rule 7, that is conversion of a private company into an OPC, which required a declaration, an affidavit from all the directors of the company. Again, in voluntary strike off, there was an affidavit that was to be submitted by directors. So all this and a few more have been proposed to be converted into a self-declaration mode. However, it is specifically stated that any filing with the NCLT, NCLAT, and RD offices would not be converted into self-declaration. That would continue to go through the affidavit route. The only difference between the affidavit and the self-declaration is the stamping and notarizing that is to be required. The severity of the consequence of misstatement would be exactly the same as in case of an affidavit. So there's no running away from that. And this actually helps in easing out businesses and easing out compliances for companies. That is why this step has been taken.
To some extent.
To some extent, yes.
So
Yes.
only 6 cases have been covered here actually to start with.
That's right.
And maybe in the next step, government can cover NCLT.
Yeah, if they enlarge it, there's nothing like it.
Yes. So please continue.
Clarification. This is a clarification and interpretation that is provided on buyback of securities, which is in section 68. The limit for buyback is stated as 25% or less of the aggregate of the paid up share capital and free reserves. Wherein immediately after that, the proviso to this section, this is already existing. This is just a clarification that is made. The proviso states that a buyback of equity shares in any financial year would actually refer to the total paid up share capital in that financial year. So the 25% calculation has to be taken accordingly. Now they've inserted the word and free reserves as well to that, because there was an interpretational deviation wherein certain people used to say that this is a fresh limit that they have imposed of 25% of the paid up equity capital. However, this committee has clarified that for this 25% calculation, always the aggregate of the paid up share capital and the free reserves would be counted. Again, under this is an insertion that they have proposed to make. Again, this is a clarification, sorry, under 68(5), which allows company to buy back the options, employee stock options. They have clarified that this would refer only to those options that are exercised by employees. This is again just a clarification and interpretation, removing the interpretational ambiguity.
I think this addition has been made because as per a Securities Contract Regulation Act, option is considered as a security, so this section is dealing with buyback of securities. So they have clarified that unless the option is exercised and vested and converted into share, then you can't exercise the buyback option. So that is okay.
Right. One is in security. Second, 68 subsection 5 specifically also states that employee stock options can be bought back by the company.
Yeah.
Now they're saying that exercised options can only be bought back.
Yeah, that is the thing. Because unless you exercise, it doesn't become a share.
Right.
That is the reason probably they are giving this clarification.
Okay. Specific prohibition on inclusion of trusts on the register of members. Now this
there is a
committee.
question.
There's a question here.
Okay.
Yeah.
Okay. Yes.
There is a question has come here. Does the definition of free reserves include surplus of P&L account and determining the amount of the buyback?
Does the definition of free reserve?
Free reserve, yes. It is defined in section 2. No? Free reserves definition is given in section 2.
It would include a surplus in P&L.
Yes.
Yeah, definitely it will include. That is right.
Because earlier it was not there. After amendment, it was clarified that P&L account balance will also be included in that free reserves. So section 2 definition.
Yeah, what happens? Many companies they used to transfer to the general reserve. Once you transfer the general reserve, that cannot be utilized for declaring the interim dividend. The safest way is carry forward in the P&L account, so that that can be utilized for the dividend purposes. Otherwise, once you transfer to the general reserve, then you cannot draw back the money. That is the purpose.
Right. Specific prohibition on inclusion of trusts in the register of members. The committee has recommended going back to the 1956 Act provision, which is section 153 that existed in the 1956 Act, wherein it was specifically prohibited for trusts to be included as in the register of members. So the same provision is now to be replicated or proposed to be replicated in the 2013 Act. The motive behind is to relieve companies from taking notice of third-party rights relating to the shares. The only question that will arise, and that has to be notified maybe by the government, what would happen in the transitional phase, wherein after the 2013 Act got enacted, if certain members were included, certain trusts were included as members, then what would actually happen to them after this amendment?
So government has to give more clarity on this issue, according to me, because if you refer to the SBO rules, they are talking about shareholding by trusts in that SBO rules, trusts and even partnership forms. So now we are saying that trust is not to be entered in the register of members. So as you rightly said, what will happen to the trust that we are already noted in the register of members, number one, and whether government wants trusts to be members or not. So SBO rules are accordingly will also need modification. So we have to wait for the government amendment on this.
Holding general meetings through the use of technology. The MCA had issued several circulars during the COVID time period, wherein they had allowed companies to hold their general meetings electronically as well. Now they're planning it to extend that to in the normal course of business as well, wherein the CLC has recommended amending the Companies Act to enable the central government to prescribe the manner in which companies can hold the AGM as well as the EGM in physical, virtual, or in a hybrid mode. They've also suggested that if an EGM is being held in an electronic mode only, then the notice period should actually be reduced in such a case. Now we'll have to see if that actually seals through.
There is a question in the chat box. Can the share certificate include the name in the following manner? The shareholder name in the place of shareholder name, ABC Trust, Mr. A Trustee.
So far, what we have been doing is that we were issuing certificates in the name of the trustee, actually.
Trustee only, not in the trust.
Not
Not the trust. But as I said, now the government has to come out with clarification. Actually, what will be the what will be the status of a trust? But so
as
far,
on
this has
today,
been,
no.
as on today, in the
As
name
of
of the
today, it
trustee.
cannot be done. As of today, it need to be only trustee.
Yeah.
I think the question is assuming that it is permitted, this law is passed.
No. It is because assuming permitted, we cannot give any answer. What the government will say, we don't know.
So today, as of today, only the name of the trustee.
Trustee.
Only trustee, no trust.
Trustee should be there.
Yeah.
Yeah. Yes, Jasveen, please continue.
Yes. Maintaining statutory registers through electronic platform, a very welcome recommendation and worth noting, wherein the CLC has proposed that certain class of companies should be required to compulsorily maintain their registers on an electronic platform, and this platform should be set up by the central government itself. Now, since this is an electronic, so maybe it would be in some cloud, etc. But they have stated that it would be deemed that the company is actually in possession of such records and registers. Again, they have ensured, or they have recommended that it must be ensured that the data is masked. That means nobody, including the central government who actually maintains the platform, should be allowed access to it unless the company shares such data electronically or in case of an investigation upon the company. The motive is it is absolutely very cost effective and hassle free and avoids duplication of efforts by the company as well to maintain it on an electronic platform. The only issue would be transitioning the current records into an electronic platform. So that would be a little difficulty for some time. But after that, if this procedure sets in, I think that this would be quite a good initiative by the government.
They should also link these registers to the MCA filings. So that if I suppose I appoint a director and file form DIR 12, my registered director should be automatically updated.
Yes.
Otherwise, there'll be lapses in people updating it, and there'll be a timestamp, and then there'll be qualifications for no rhyme or reason.
So you are telling government you enter my register also?
No,
not government. It is an automated procedure to the software.
Yes, it's only the way our master data is linked. If you see, the moment we file.
Dipti, when you go to the bank, when you deposit your check in the cash counter, automatically your,
exactly.
For banking, so
I'm coming to that point only. So now this is the starting point.
Yeah.
See, I look at it as it's a really big step. Yes. So many places is occupied by physical record storage for 8 years, for permanently and all that. If we have DigiLocker for our personal document and the government, why can't have for corporate and business? It has two-way help. Once it is online, there cannot be any playing with that documents.
Yes.
First and foremost, security. It helps company also not storage. As you right, Nidhi said that, give it automatic. So it's once done, see the implications, you cannot play with that. Right. Third thing, all the things which you unnecessarily spend time and energy in recording, then searching and finding and all that, the search will be so easy here. In physical record, it is so difficult. So cost of storing, then spoiling the document, theft, my record is fire happened, and everything, so many things can be avoided. And I think the government is rightly using MCA platform, which is fully auto to start with, and it will pass on to accounts and other records also. So everything on the cloud, everything out of the control of the company, no physical record, no fire, no theft.
One more thing, right of inspection. So earlier we know that when the physical filing was there with ROC, we had to go to ROC Mumbai or Pune for inspecting any document. So that was so difficult. Now after this electronic platform,
Electronic.
now by sitting over our office and we can
Yeah,
download
anytime,
any
24/7.
24/7 that
Any
facility
place,
is
anytime,
available.
anywhere.
So similarly, in this case also, statutory registers, all these will be available on the electronic platform. So any shareholder who wants, so as on today, what happens? If a shareholder wants to have an inspection of register of members, then he has to visit the company's office. Now, by sitting over his office, he can download, see the register. That could be the.
But some of the older companies, it will be initially a tough task. Because the company is older by 50 years, 70 years, 100 years. Converting the document, creating the things is going to be a massive job.
Yes. So in the case of register of members, what had happened when the Companies Act 2013 was introduced, what was said is that you have to transfer your entire old data into the in the new format. So that was a very difficult task, particularly for old companies, say 50 years old companies. Now, if same case happens here, now we have to wait for the rules actually what we are supposed to do.
Yeah, there is a comment that security of data, but otherwise also these documents are available for inspection. So the same it is stated that we are not available, the data is not available unless we register, pay fee and all that. So I think that is, they have tested. So that's why again they will test. And I look at this move going far, far ahead. And we may see that company will be without record, physical record. And you can only pay for the actually occupying the premises for your people and not for record.
So no requirement of registered office as well. A big requirement goes away.
Even in many people, they can work from home, not even sitting at the place at the premises.
Yeah. There is a question, what will be criteria for specified or class of companies for maintenance of a register? Is it in the report of Company Law Committee? I think they have not mentioned, it is left to the government. Now it will come up.
Yes, it's not there as of now. It's given, the discretion is given to the government to prescribe rules in that regard.
In fact, I think in 2018 or 17, a similar thing got implemented as far as the ODI and FDI transactions are concerned, because companies which are having ODI and FDI, they had to fill up all their previous investment data in the system of RBI, and then after that RBI itself is able to monitor the investment limits for those respective companies in those respective industry limits. So in similar way, monitoring by government also will also be very easy, just at a click of a button if this happens.
And in the time to come, government can share this data, I think, with other regulatory authorities like SEBI, RBI also. So that will also help. Yes.
There's a question.
But it is not relevant to this actually topic. You want to take it because there is something which is not relevant to Company Law Committee. It is relevant to some board meeting video is forgotten. I think it's not correct we take this thing.
Yes.
Because it is not relevant to topic. Sorry. We can connect it otherwise, not on this platform, please. I will request the Mr. Sivkumar. There is one comment is hopefully if the government platform is implemented, it will run smoothly, unlike recent MC. That will happen initially.
You have to wait and see. That you have to wait and see. There is going to be initial.
Thanks, Mr.
Sivkumar. Will be there and all, but they'll sort it out.
Yeah, Mr. Sivkumar, thanks for understanding. You can connect personally. Thank you. Yeah, just.
Ma'am, hello.
Yes.
Yeah, madam, it was mentioned that one of the panelists mentioned there is no requirement to hold the registered office per se after this amendment, right?
No, I said it could be one of the criteria that it removes. Not that it will not be a requirement. Registered office is connected in so many ways. Registers is just one of the things.
Yes.
So that's not a fallback of this. No.
I was saying, how will the company, communication to the company and notices?
Yes. So it will continue. As we were just trying to deliberate that maintaining of records at the registered office was one of the primary requirements. With everything going electronically, as Professor also mentioned that we will not be able to work from home. So that was just on a lighter note, it was a comment.
Thank you, ma'am.
Registered office will remain.
Yes, definitely.
Yes.
Just a small remark. Sorry, I was slightly late. I was also part of the company law, amendment team in 2015. But let me share my experience. The views of the government is to reduce the professionals' involvement, right? That's what their intention is. So I remember, Joint Secretary Mr. Bhatia was there, and he said, Mr. Mehta, why can't we eliminate profession like company secretary and chartered accountant? Why people should be requiring the help of PCS to incorporate a company? So we wanted to make it so simple. So now answering to this thing where maybe you'll have those government will have our own registers of directors or a shareholding, because anyway you are giving those informations, and there will be a way whereby you are just filling the information and everything is going to be updated online. So the time will come where you will see all those records on the mobile also. So the time is not very far that you can even do all those inspections on a mobile also. Yeah, so I'm done.
So that's why the CS is not required to make entry in the register. So CS has to just do corporate action of uploading the information, and balance thing will be done automatically.
Yeah, Jasveen.
Yes, let's hope for the same. Yes. Moving on to the next amendment, IEPF related changes. So there have been certain proposed amendments to 124 and 125. There are two clarifications and two insertions that are proposed to be made. First clarification is in 124 subsection 5, which says that all the pending dividend of against which that has remained unclaimed or unpaid for 7 years has to be transferred to IEPF. Second, it also states that the corresponding shares or the securities also have to be transferred to the IEPF if the amount of dividend remains unpaid. Now, what they're clarifying by this is all the pending and unclaimed dividend regarding the securities that are transferred to IEPF should also be transferred, which means if you're transferring the securities to IEPF, the unpaid dividend for all the 7 years has to be transferred to the IEPF account. The practice that certain companies used to follow is only the first year's dividend used to be transferred along with the securities, and the 6 years dividend used to remain. Now, this is being clarified that all 7 years dividend has to be transferred along with the securities. Second clarification is, this is actually filling up a loophole. 125(3)(a) says that amount in IEPF should be utilized for the refund of amount of redemption amount of preference shares. So any amount of redemption of preference shares that remained unpaid or unclaimed used to get transferred to IEPF. Now this amount in IEPF can be utilized for a refund of the same. So this is just filling a loophole that was there in the Act. Two insertions are insertion of 125(12), where IEPF authorities would be allowed to delegate their functions to officers for administrative purpose. This is aligning with something, sorry. Okay. So this is aligning with something like what the IBBI does, wherein a power is given to the IBBI as well under the IBC to delegate its functions to officers for administrative. So similar approach is proposed to be followed for the IEPF authority. Another insertion is the amount payable to the shareholders pursuant to buyback that remain unclaimed for 7 years is also proposed to be transferred to the IEPF. This is an insertion, proposed insertion to the Companies Act.
I think the whole idea is that the entire things should be available at one place to the shareholders, the shares also, and even the past unpaid dividend. So it should not happen that for 1 year dividend you have to contact the company, and for another year you have to contact IEPF. Now after this amendment, the shareholder can just straight away go to IEPF at one place and he will get back this entire amount. But the only thing is that the system of refunding that amount, that needs to be strengthened, and we should ensure that it is refunded at a faster speed. That's all. Otherwise, it's a good amendment.
It was required because this is a practical question that was arising every time in such kind of shares which are being transferred to IPF. Though it was implied, but since it was not there in the act, the companies were not transferring actually.
They were transferring only 1 year and 6 years were remaining with them. That is
Yes, but there was no logic in keeping that in the unclaimed bank
correct.
account.
Because if the share itself is transferred, where is the question of getting the dividend? That also should go along with that.
Yes.
Yeah.
There is a question. There is a question. Just like transfer of subsequent dividend, does bonus share issued in subsequent years also need to be transferred? The answer is yes. Corporate benefit, all the benefits.
All the benefits.
Yes.
Panel, any other? It's yes, right?
Yes, please. It has to be transferred. Everything. It has to be transferred. Yes.
It has to be transferred.
Okay. Okay, Jasveen.
Strengthening the NFRA. So section 132 provides as on date that NFRA can take action against professional or other misconduct. However, now they are extending the arms of the NFRA and proposing to cover any action other than any contravention other than the professional or other misconduct also, against which NFRA can take action. Specifically, they have stated that any contravention with the NFRA order can also be, the NFRA would be empowered to take action. Another, yes, ma'am.
Sorry. They are telling professional and other misconduct, and then say specifically for the order of NFRA. Other misconduct is very generic word, other. We have to see how they are going to clarify that, because it's all professionals are generally governed by the professional duty.
Yeah, the professional misconduct is either in the CA Act or CS Act or CWA Act today. So the moment you say professional act, that means there are two authorities will be getting clashed.
Yeah. Not only that, it is saying against professional and other misconduct.
Yeah, other is very vague.
Special
yeah.
Other. I'm looking at that.
So Dipti,
so as a professional and as a professional body, you can control the conduct or misconduct of a professional as a professional duty. And if you are adding the word other, it's a big word. According to me, it's very generic.
No. So Dipti,
I think it is already there in the act.
Yes, this is already there. Now they're further extending it to saying other contraventions in addition to professional or other misconduct.
Other misconduct is already there.
I know, but again, it's coming to my mind that other word is big word.
Yes.
Now there are two others, other contraventions and other misconduct.
We don't know.
See, the conducts may be of your LLP also. In future, you will be having a multidisciplinary fund. So there are certain things which has not been defined under the professional misconduct of a respective institute. But tomorrow, if you have those LLPs, which are going to be in the future, so maybe they wanted to cover that also.
Yeah, there is a comment in the chat box. It would have been better to differentiate between gross and willful misconduct. What is gross and what is willful?
Oh, probably you require a separate discussion on this.
Yeah. Thank Mr. Venkat for your comment. Thank you.
Continue.
The other two proposed amendments to this section is ensuring financial autonomy to NFRA by the constitution of an NFRA fund. Right now, NFRA receives its fund from the central government. So now they're ensuring that there is some autonomy. And providing second is to provide operational autonomy, wherein NFRA would be enabled to actually make regulations for specific matters. So something like what happened with SEBI, wherein initially it was a part of the government department as well, and then the 1992 Act came in to provide it autonomy. So in the stepwise procedure, they're quite following the same thing, wherein now autonomy is going to be provided to NFRA.
One more regulator.
One more regulator. Yes.
One more regulator.
Yes. Strengthening the audit framework. Very important amendments relating to audit and the entire audit framework. First is section 144. Section 144 basically provides a list of services that cannot be provided by an auditor to the company. Now what they are proposing is that there should be made a distinction on each company basis. That means certain class of companies should actually be allowed to avail these non-audit services from their auditors as well. And the other companies in which substantial public interest is involved, the central government can actually elongate or enlist more number of services that are prohibited. So they just want to make a distinction rather than a one-size-fits-all kind of an approach.
Very welcome approach.
Yes.
I like this.
Yes. Section 147 is to now cover penal consequences under 143. This is again filling up a loophole that was there. There was lack of clarity on this. Now they've specifically covered any contravention in 143, which is power and duties of auditors, and they can take penal action for such contravention in 147. A very important one is resignation of auditor. There had been several companies from which the auditors had resigned, and viewing the same, the CLC actually discussed it and said that if now there should be changes to the Companies Act which state that the auditor should provide assurance to the shareholders of the company that there is nothing irregular in the accounts of the company when they are making a resignation, and should ensure or entrust the shareholders that the resignation is only an independent decision. And, if the resignation is by any chance due to non-cooperation from the management or due to fraud or due to misconduct or any such reasons, the same has to be particularly and specifically informed in the resignation notice that is given. If the auditor fails to inform this and it comes to the notice of the regulators or the government later on that there was such irregularity during the tenure of the auditor, then the auditor would be penalized for the same. So quite an onerous task on the auditor even while he or she is resigning. Next is the central government may mandate joint audit for certain companies. Joint audit is generally a more cost heavy kind of audit that is conducted by more than one audit or audit firms. So the central government may mandate this audit for certain companies. Auditor of holding company must give assurance of fairness of audit of subsidiary company. So anyone who's auditing the holding company would actually have to undertake that everything is regular in the subsidiary company as well. Last, recognizing forensic audit under the Companies Act. Though forensic audit is prevalent in companies in which investigation is going on, however, there is no specific recognition of forensic audit under the Companies Act. The CLC deliberated that this should actually be recognized under the Companies Act now.
This is also crucial, because this forensic audit is very regularly used in insolvency and bankruptcy court.
IBC cases.
And I think the same should be allowed here, should be recognized in the sense that if independent directors or the feel that there is something wrong, at what juncture, I feel that this is the starting. Over the period, there will be responsibility and the provision when the forensic audit when the independent director should take a view that when it should be done, and it will be a kind of situation. I think that way it will come. And also there are many CA in this webinar, and I would like to know their view on interesting that, while giving resignation, the comment that there is nothing wrong in the accounts of the company.
It's going to be a practical issue.
Yeah, panelists, your view.
LODR, I think, because there the auditors and independent directors both are required to give reasons for resignation.
That is one thing, reasons. Here it is reasons everyone give. It is auditor to assure shareholders that there is nothing irregular in accounts. Now, which accounts? The accounts which he audited, he already given comment. Accounts which he is not going to audit, he has not seen that.
That I think he cannot give assurance. That's not
No,
practically
he will
possible.
not give the assurance. He will
I am
give only
asking
the,
that question. That
probably he
auditor
can
to
give-
assure shareholder is something that is my point.
He'll be able to give assurance only till the day he audited.
Exactly, yeah.
He will not be able to
exactly.
give more than that.
That audit he done, he commented, and audit he is not doing, he has not started. How he will assure shareholders? So that's why I'm asking if any other view is coming. According to me, this is going to be difficult.
I think probably any
Yes,
of the
it-
chartered accountant in this webinar, they can answer this.
Yeah.
So this is definitely going to be a practical issue. So if probably the government wants that if there is any issue of this kind due to which you are resigning, then you have to specifically tell. So the image of the company may be at stake at sometimes. I don't know what will the impact of this.
So it could
Yeah,
be
let's
so
see.
if somebody is
No, no, even any irregularity in the accounts is there, at the moment it is audited, probably that has to come in his audit report.
Yes.
Let's wait for
but
the
if he
more
does not issue
clarification.
audit report, then it's in the mid of the audit that he came across some irregularity, and when they are not getting a satisfactory answer, so they might choose not to audit also. In such
In
case, if they
between,
don't issue
in
an audit
between.
report,
Yeah. In between, they are resigning
yes,
and they are
then
telling
in
that.
such case, they will be required to give reasons, and especially as Dipti rightly mentioned, on the correctness of the audit process and the accounts. Not the audit process, sorry, the accounts.
Yeah, I think
they don't want this, this kind of resignation due to such a reason that there is an irregularity.
I think we will wait for the more rules, regulations. Okay?
Yes.
What is the idea of mandating the joint audit for certain companies? That also, what is the class of companies? We do not know. Because there are already voluntarily, there are a lot of companies, they are appointing a joint auditors.
That depends on the scale of the company. When such they feel that it could be a better governance issue as well.
You have multiple branches, so
Yeah.
definitely voluntarily companies are doing it. But now
already there are a lot of companies, they have a joint auditor, they are
Yes.
doing it. Voluntarily, it has been done actually.
Yeah.
Maybe they'll provide a criteria of revenue or turnover or profit, and then they'll come up with it.
Because
Maybe.
probably it will be interesting to see what are these certain companies, what is the thing, etc.
But actually, sir, the report stated that not many companies are conducting joint audits. So now they're thinking of mandating it for certain companies. So that was something surprising.
See, earlier they come up with retirement of auditors just to ensure more transparency and more regularity. One auditor should not remain associated for decades with the company. So that was the objective of rotation of auditors. Now they are coming up with this. So it's more on, just ensuring that yes,
Governance, transparency, independence.
Yes, that's the only thing.
So probably auditors should not become so friendly with the auditing for the companies over a period of time.
Jasveen,
Yes, sir.
while there are provisions or rather proposals for strengthening the audit framework, these are proposals for strengthening the financial audit framework. Are there any provisions in this report for strengthening the secretarial audit framework?
No, sir.
No, nothing.
Nothing yet.
Nothing is there on that.
There are so many things to be strengthened. And if you remember Bala and Dipti, in an earlier seminar, I had said that we should make representations to the government to protect the tenure of a secretarial auditor. There is nothing to protect him. Dipti, in fact, I had made some note on this when I was with Mehta Mehta. And it should really be forwarded to the government. Here you are introducing strengthening audit framework. It is already strong. You are making it stronger. No, quite all right. But look at secretarial audit. It is there is no real strong framework there.
Right.
Dipti, see if you can get that
Yeah.
English I had prepared. With Meghna Shah and I had prepared it.
Okay.
If you can forward it in some manner to the powers that be. There's really nothing. You can today make a difficult report and he says, okay, go. I'll take another secretarial auditor and get a fair report which is to my liking. You can't do that. You can't do that with a financial auditor.
It's new, it's evolving. We have to present, represent, and push continuously.
Yes.
Yeah.
Here, one more thing, that the auditor of holding company is required to say that about the subsidiary companies accounts.
Yeah.
To say that they are a fair, true and fair view. So their auditor has already given their report, true and fair view. Now, holding company auditor again. Now, if I have got 200 subsidiary companies, so how far it will be practical? I don't know. It is going to be practical problems.
No, but sort of that the auditor of holding company has been given assurance. So it's more of an onus lying on the holding company's auditor to take that assurance from subsidiary company's auditor.
Actually, as on today also.
That's also going on, in fact.
Yeah, actually, at present is going on, and they have made it in a very clear way that if once the assurance given, the onus is on the auditor of subsidiary company, because holding company auditor is giving, but there was no specific this kind of clarification. They were really concerned, holding company auditor, that they don't have view, and that's why I think it is it's a welcome move. They have clarified. That subsidiary company auditor, because holding company auditor is giving comment on all the subsidiaries.
Yeah.
So that's why that is necessary, accordingly.
So I think right now they say they have relied on the audit. Now they say they have received
now
that
it is
assurance.
clarified legally that subsidiary company auditor will be responsible once he gives the assurance.
Yes.
Yeah.
Fair move.
Fair move.
Right.
Yeah, Jasveen.
Yes.
Bala sir was saying something. I interjected.
No. Today, practically, it is happening.
Yeah.
But the only thing is, they have actually put it in the black and white. It should happen.
Yeah, the same
thing.
That's it.
Jasveen,
yes.
your presentation is superb. But it will become still better if you take steps to follow up on this strengthening of statutory secretarial audit. No, really, in your youthful enthusiasm, you should do it. Old fogies like me give up, but you should not.
Definitely, sir. Definitely.
You get that thing that I had prepared. It is there in the office somewhere.
Okay. Sure, sir. Sure. I will. The next amendment that was proposed is standardizing qualifications by auditors, wherein the committee stated that the central government should actually introduce a format in which the auditor should state the impact of every qualification or adverse remark on financial statements. So now the qualifications cannot be in the middle of a lot of data wherein silently there is a qualification. There is a possibility that there will be a complete format, separate format for any qualification and to analyze its impact for the shareholders.
It's really good.
Yes.
It is good. I think in LODR, I think it is already there. So similar provision they may bring in the Companies Act also. So what they want is that in the financials, what is the impact of what your adverse remark that should come out.
Yeah, correct.
It is good.
Right.
It is good.
You're right, because SEBI covers only the listed companies.
Yeah.
So here it will cover all the companies.
Yes.
Right. Setting up of risk management committees. So currently there are certain provisions under the Companies Act relating to board report, audit committee, and duties of independent director, which specify risk management system or risk management policy to be put in place in the company. Now what they're recommending is that an inclusion must be made in the Companies Act to which provides that certain class of companies should be required to compulsorily constitute a risk management committee. Owing to the number of risks that a business is exposed to, this is a very good recommendation given. And the LODR currently has a provision wherein top 1,000 listed companies are required to constitute the risk management committee. So now they're just planning to extend it further to certain other class of companies as well. And
So
this
it's a
would
good
ensure
move.
better corporate governance.
Yes, it's a good move. Yes.
Clarifying the tenure of an independent director. These are certain clarifications that have been issued with regard to the tenure of the independent director in a company, wherein they state that a tenure of the ID would begin from the date they are appointed as an additional director. A lot of companies followed the practice that they would appoint independent directors as additional director and disregard that additional director tenure for the purpose of calculating the total tenure of the independent director. This has been particularly and specifically discouraged by the company law committee, wherein they've stated that this tenure cannot be excluded. Second, impact on tenure due to resignation. So they've stated that a total cap of the tenure of 5 years in a single term and 10 years in case of reappointment is irrespective of any resignation. So if before the completion of tenure they submit a resignation, the independent director submits a resignation, there is no new lease or no new life to the tenure. The tenure has to be capped. Last amendment that is actually very welcome for legal and consulting firms. This relates to the cooling off period. So after completion of the tenure of the cooling off period, section 149 subsection 11 states that the independent director should not be associated to company directly or indirectly during the 3 years time period, which is the cooling off period. The ambiguity here used to be that if a legal or consulting firm conducts even say one arbitrary assignment, that would actually disregard or kind of not meet the cooling off requirement. Then now they have stated that such legal or consulting firms can continue to render services subject to the threshold limit in 149(6), which is actually the eligibility criteria. As on date, that provision is 10% threshold. So if a legal or consulting firm provides services for up to 10% of its total turnover to a company, then the cooling off period would be treated to be regarded. Second amendment that they propose over here is this limit of 10% should come down to 5% only. In case of 149(6), that is eligibility, as well as 149(11), that is for the cooling off period.
So this amendment is clarifying in nature. So it is okay as per the intention of the law. It was clear actually the tenure as additional director should also be counted. But now it has been clarified in the act itself. So it is good. Next.
Yes, another very important amendment, much awaited as well. Proposed amendment rather, revisiting provisions on disqualification and vacation of directors. The committee has recommended, so as on date, section 167 states that any disqualification would also lead to a vacation of directorship. Now, what the CLC recommends is that only disqualification in personal capacity under 164(1) for reasons such as insolvency or person becoming of unsound mind, etc., only that should be covered. And one disqualification under 164(2), that is for reasons for non-compliance or non-filing of returns, etc., that should not be covered for vacation of directorship. They have also clarified that this would be prospective, which means that if any director is currently, or maybe after the amendment, if any director is has vacated the office due to the prior provisions, that would not be covered. This would have only prospective effect. Second amendment is in the proviso to 164 subsection 2, which states that if any person is appointed as a new director in the company, a breather period of 6 months used to be given to such a new director, during which it can correct the non-compliances. And for that 6 months period, he would not actually be disqualified as the director of the company. However, now what they state is for failure to file annual returns, 6 months is a sufficient period and a good enough period. However, if all the other directors have been disqualified due to failure in repayment of deposits, debentures, dividend, etc., the new director should get a time period of at least 2 years to make good the error.
Jasmine, there is a request.
Yes,
Ready.
ma'am.
But there is a from Mr. There is a proposed moratorium of 2 years or cooling off period if the director is hit under section 164(2). Please clarify, Mr. Prasanjit. There is a Mr. Prasanjit has commented in the chat box.
Yes.
That there is a proposed moratorium of 2 years or cooling off period if the director is hit under section 164(2). Please clarify.
No. So that 2 years time period is for the new director that is appointed. So let's suppose in a company, all the other directors have been disqualified because the company failed to repay its deposits or repay its debentures or provide dividend. So in that case, what the provision stands today is that a new director can be appointed in the company, and that director would not be disqualified for 6 months, which was the time period given for him to correct the non-compliance. Now they are proposing to amend it to 2 years. So the new director will get a time period of 2 years for correcting the non-compliance relating to deposits, debentures, and dividend. Is that clarified?
I think so. He should
Yeah.
reply. And
There is
there
no
was a
moratorium.
comment. There was a comment from Mr. Virendra. One more point in view of ease of doing business, if it could have been proposed for appointing auditor in case of casual vacancy due to resignation, the board appointed auditor, the requirement of shareholders approval within 3 months could have been dropped. Just a suggestion. But I think in resignation, there is a real serious consequence. They will like the shareholders to be involved. In case of death or something is fine, but resignation, again, it is a serious issue. Panel, please, your view.
Yes.
Yeah, Jasmine.
Because all along the auditor's appointment has been given to the shareholders only.
Yeah.
So when it comes to the resignation, etc., naturally the shareholder like to see who's the
go to
auditor, who's the
shareholders.
thing, etc. So naturally it will go to the shareholder. Probably that will not come through.
Yeah, yeah, go ahead.
Yes. The last amendment to this disqualification and vacation is they are planning to segregate provisions for nominee directors and other directors. Currently 164 and 167 does not make any such distinction. The reason behind this is a nominee director is a non-executive director who is not actually involved in the day-to-day operations. So what they are planning to do is he should be kept away for any non-compliance conducted by the company. The nominee director should not be punished for it. However, it is worth noting that here they have covered only nominees of debenture trustees registered with SEBI and not other nominee directors, which in my view should actually be extended to all nominee directors.
Absolutely correct. Because nominee director means he represents only the particular interest of the particular organization which he represents.
Yes.
Now, for example, there are a lot of financial institution banks, they are giving the money to the company by way of borrowing. In which case his role is actually restricted. He has to only interest, his repayment comes through and his principal amount is safeguarded, etc. That is the thing. When they are talking here a nominee debenture trustee, then automatically it should be extended to the other nominee directors as well. Why discrimination?
Why it has been restricted to debenture trustees? That is not clear actually.
Right.
Sir, this is because the representation is being made by SEBI only in this regard. So when this proposal is being made, then you can also be assured that the other nominee directors will also be considered.
We hope so.
Yes.
And further, this protection which is proposed here should be extended to all nominee directors. Yes, I fully agree. But it should also extend to other things such as non-payment of TDS, non-payment of non-depositing of PF. All those things also should be covered because that poor nominee director can unnecessarily get into serious trouble if this company is not doing all these important things. In this case, it's only a vacation of office, but there it could be imprisonment also.
There is a comment in chat box, carving out of nominee directors only and not all non-executive directors is not, it seems not equitable. Views of panel, please.
All non-executive directors, some of them are the stooges of the promoters, you see. So,
Right.
so they need to be punished.
And the intention.
You cannot see, as far as nominee directors are concerned, as Bala said, they are there with a restricted purpose, protect the interest of the lending institution, or protect their their owners. But in the case of other non-executive directors, I think they could be very well be the looking after the promoters' interest, seeing profitability, this, that. They could be crooks. I'm using a strong word.
Depends on the control that they exercise, and like even if they're independent directors, even if they're not related to promoters, they have a very valid role to play, and they can always impress on the company for compliance. This is a compliance issue. That's why they are there. So if they cannot do that, then they should vacate office. If they are unable.
I fully agree.
Okay. Okay, Jasmine.
Yes, ma'am. Cooling off period for auditors to become directors. The committee has suggested that a mandatory 1-year cooling off period from the date when the auditor ceases to be the auditor of the company should be ensured before such auditor is permitted to hold the position of a non-executive director, managing director, or a whole-time director. Now this covers the company as well as its holding subsidiary, fellow subsidiaries, and associate companies. So he would require to meet this 1-year period for all these companies. And they've also clarified that in case of an audit firm structured as a partnership or an LLP, this would operate only concerning the partner who actually audited the accounts of the company. This is only to ensure that auditor as a person should be independent while conducting the audit. So this is in furtherance to that approach.
It's a good suggestion, actually 1-year cooling period to ensure independence of the auditor. Yes.
Right. Okay, just.
Similarly, cooling off period for independent directors to become the managerial personnel. On the similar lines, a mandatory 1-year cooling off period from the date of cessation of office. If the independent director wants to become a managing director, whole-time director, or manager, again operating on the same group of companies, which includes company, holding company, subsidiary company, fellow subsidiaries, as well as the associate companies.
They are harmonizing the same provision along with the SEBI, because provision has come some time back from the SEBI. So probably they are harmonizing with the company law and as well as the SEBI regulation.
LODR.
Right. Right.
Yeah.
And they've also stated that ID is supposed to be an independent person, similarly as an auditor. So if the ID knows that he may be moved to such important positions in the company, then his independence may get affected or compromised due to the same.
Right.
Which is why the 1-year cooling.
ID moving to an executive position is something which is really a very, I don't know, I can't think of any scenario, and moreover, I don't know how this, I would request other members to please respond. I really don't know how this helps, because see, the managing director or whole-time director position is a requirement. I mean, no company can wait, okay, you ID become a managing director after 1 year. It could be as part of succession planning. Fine, I agree. Other than that, I couldn't think of any scenario where this would actually come into play. MD is an immediate requirement. WTT is an immediate requirement to fill up those skills, expertise required on the board, which maybe now they want that person to be fully involved as a CFO or as a chief operating officer. In such case, they would want that person, maybe a professionally run company like Infosys or Wipro, they would say, okay, now you've served me as an independent director for the past 10 years, and I find that you now know the business quite a bit. You are technically sound. So after a year, you become my MD. So that's a succession planning. But I can't think of any other scenario where this would actually affect and how the cooling period would help the company. Auditor, I understand. Auditor is knowing all the nuances of the company. Independent director is never involved so deeply in the company as auditor is. So I really don't know.
There is a comment also that the role of reversal of auditors and ID to take up whole-time position irrespective of cooling off period has raised lot of debate and reservation which is observed. The only way could be that the ID should not have been part of audit committee, and only in this case his independence will not be compromised. This is the comment by our participant, Mr. Prasannajit and Mr. Venkat Pillai. Thanks for your contribution.
But what if ID is an excellent is an HR professional, so he is required to take up the position of okay, they're talking only about MD or WTD, but maybe a recruitment company's MD then. So I think it's quite again, as said, debatable, and need to understand scenarios where this would actually be implemented.
Okay, I think okay. Okay, Jasveen.
Clarifying the manner of resignation of KMPs, section 168 relates to director resignation, wherein they state that a company has to file the return for an intimation for resignation of the director. However, if the company fails to do so, the person himself can go ahead and file the return. However, such a provision was not there for KMPs. Now they propose to implement the same for KMPs as well, wherein a 30-day period would be given initially to the company to report the resignation of the KMP. And if the company fails to do so, the KMP himself can file the intimation. What they noted in the report is that a resignation does not require to be formally accepted. It is just on the discretion and choice of the director or the KMP, as the case may be. So if the company does not report it, we should not deprive the KMP from the right of actually going ahead and reporting the same. This would especially help KMPs who are resigning for reasons like some misconduct in the company or some fraud in the company, wherein the company does not really want to report such a resignation. The KMPs can go ahead and do it themselves.
So it's a good move, I think. As per the directors also, this DIR 11 provision is there. He can file directly. So here what happens, sometimes suppose company secretary resigns and he joins some other company. When he cannot file his return there, the system will say you are already appointed in that old company. So it is good move if he can directly file resignation with ROC and then join some other company.
Thanks. Reviewing provisions on merger and amalgamation, certain provisions relating to merger and amalgamation were reviewed, and certain changes were also proposed. One of which is CLC was deliberating to remove liquidator under IBC from the ambit of 230, that is compromise and arrangement. But while discussing the same, they have decided against it. That means there would not be such an exclusion because quite a lot of number of liquidators under IBC are using this compromise and arrangement technique to help the company. So they have not made any effective amendment to this effect. Second is treasury shares. So the CLC proposed that each company that is holding treasury shares pursuant to a merger, which means the company in the process of merger and amalgamation, if the company acquires its own share, then that is referred to as treasury shares. These treasury shares should be reported to the central government in the form of a declaration, and the company should dispose of such treasury shares within 3 years and report it back to the central government. The reason why treasury shares are frowned upon by the government is that it allows the promoter or the directors of the company to additional voting rights of the company without the knowledge of the minority shareholders, which prejudicially affects the minority shareholders. In certain jurisdictions, this is also used as a defense technique for takeover. So, but this report has specifically stated that these treasury shares should be disposed of within 3 years. Then amendments or proposed amendments relating to fast track merger. The current limits for fast track merger is 90% of the total shares. That is, the approval of 90% of the total shareholding of the company should be received for going ahead for a fast track merger. This was quite an onerous limit, and it did not cover the number of members. So now the amendment to that is proposed to that effect is the approval by majority persons present and voting at the meeting, plus holding 75% in value of the shareholding of the persons present and voting, plus in totality. These two limits were for present and voting at the meeting. Now this is for the overall limit, which is plus more than 50% in value of the total shares of the company. This would be the new limits for going ahead for a fast track merger. So this covers the number of members as well, and it covers the people present and voting at the meeting, as well as the total shareholding of the company. Very, very important amendment and quite a welcome amendment to the fast track merger scheme that is proposed is fast track merger should be extended to merger between the holding and subsidiary company, and not just wholly owned subsidiary as it stands today in case of unlisted companies.
So it is good. It is good move actually. Fast track merger. It will help so many companies, and the power is given to the RD. You don't have to go to NCLT for this.
Yes.
And even if it is not a wholly owned subsidiary, you can follow that route.
It will be quicker. Really, it will be fast.
Yes.
That is the thing.
One important move that we are seeing is that now this moving towards protecting minority shareholders' interest. Like we've also seen in LODR amendments, where in directors' appointment they want to go for majority of minority shareholders. I think what should be done is that should be defined as such in under section 2 as majority of minority, what they mean, and they should list down, because okay, merger is one, appointment of directors is one. As many would agree, in case of listed companies, we are practically following 2-3 provisions. So this should be uniform both between MCA and SEBI, and this should be properly defined in both the sections. Here they're putting up a percentage. Then there's another percentage that's there in for LODR. Then there'll be specific. It's something which is a real difficult compliance. This should be uniform all across as to what is meant by majority of minority shareholders and how those interests should be protected.
Right. This is also an issue in case of a operation and mismanagement case. Who exactly is a minority shareholder?
See, minority shareholders again needs to be defined.
Yes.
The small shareholders are minority shareholders. Now, even somebody who's holding 1%, then what do we say about those? In the case of Maruti, we have seen that famous case when minority shareholders actually turned back the entire decision. Right. So they are powerful lot. And they should be given that place in there, but it should not be subjective for mergers, for this action, that action. It should be uniform across both the regulations. That will be really easy for compliance.
Right. The committee has also proposed the establishment of special benches of the NCLT for matters of economic importance, such as mergers, amalgamations, corporate restructurings, and specific IBC cases that involve public interest. This will help in declogging the benches of the NCLT. But it should also be ensured that sufficient number of members are appointed.
Yes,
Very welcome.
Yeah, that's a very good move, because see, nowadays what is happening, all NCLT bench member, they are all busy with IBC, and they do not have a time to hear those mergers and the other relevant matters. So it's a good move.
Right. Yes, sir. Thank you. Easing restoration of struck off companies, again aligning with the move of declogging or reducing the burden of NCLT. If any person is aggrieved by a strike off done by the registrar of companies, then such a person can apply within 3 years of the action of strike off to the RD itself, and they do not need to approach the NCLT as the situation stands today. And RD, if satisfied, can then pass a restoration order. However, if the person applies after 3 years, but before the expiry of 20 years, then the application would have to be made to the NCLT. So this is one scenario where two powers or two adjudicating authorities and a tribunal would be allowed to have jurisdiction.
If you wake up early, you have early resolution. If you are sleeping, then you fight for it.
Right. Very pertinent move of recognizing special purpose acquisition companies. This is SPACs are a very good and prevalent practice in the foreign jurisdictions. Now the CLC is proposed to actually identify this concept under the Indian company law as well. So special purpose acquisition company is a company that does not have any operating business. It only operates due to with the objective of acquiring a target company. And so the CLC recommended that such a concept of SPACs should be identified in company law, and SPACs should be allowed to list their securities in India as well as outside India in global jurisdictions. Mostly in this concept of SPACs, the SPACs first get listed either in Indian jurisdiction or outside India, and thereafter they identify a target company. So the CLC also noted that an exit option should be given to the dissenting shareholders of the SPAC who actually disagree with the choice of the target company. And another thing is, since SPACs do not have any operative business other than acquisition, the CLC has recommended that a relaxation should be there for not striking off these companies due to non-operation. Also, SEBI consultation would be required in this manner, since it involves listing of the units. And for the knowledge of the participants, there is already a primary market advisory committee of the SEBI that is deliberating upon the issuance of units and listing of SPACs.
I'll be curious to see the provisions that get notified.
But is this proposal really a good proposal? See, here we are talking about listing a company which has no business. It is merely holding shares for the purpose of holding for a period of time before they go to that other company. It's a special purpose acquisition vehicle. It is not an investment company also. Is it advisable to list such a company and permit the listing of such a company and make an amendment to the Companies Act to enable all this? Is it not a little unnecessary, some maybe dangerous also? I don't know whether dangerous, but I think quite unnecessary. No business, nothing. Not even dealing in shares or investment in shares.
So SPACs as a concept only is a two-edged sword. It can go really well or it can go really bad. So
don't list it, no? Don't list it. Let it be an unlisted company. Like when the Tata Steel acquired all those companies, there were so many SPACs. They were not listed companies. Why list them and get the public into it and I don't know what?
Listing actually helps. It is a good attractive mode for companies. So if it is
what does it do? That means it gets money of outsiders to buy shares, which are not going to be sold at a profit or anything. They are going to be passed on to the parent company. So why? This can lead to scams. If the promoter wants to do something for buying shares and wants to do it in a foreign location, let him do it out of his own money.
We have to wait for the rules amendment and what the government really thinks about it. Then only we can say something.
But Suresh, maybe the thought may be that see, now there are lot of new concepts are coming up. So, for example, tomorrow you have a company which wants to take over the Amazon in India. So probably, that company is like a company which is going to do the transactions and going to acquire the shares. And that company may be wholly owned subsidiary. So the idea is to get a valuation of the holding company. Amazon may not be a listed company, but the company which is going to acquire this special purpose acquisition company. So maybe, one of the reasons is I can go in the market and say, look, I'm going to acquire the Amazon, and for which I need money. So, and there are companies, there are shareholders or investors, who are ready to invest in this kind of a transactions.
So in fact, in the committee report also, they've noted that there are certain Indian companies who have gone to foreign jurisdiction to avail the benefit of these packs.
I think Tata Steel must have done that when they acquired that big steel company abroad. Tata Steel.
Quite possible. Yes. Yes.
So
But those acquisition companies. Sorry.
This pack is a really different move to give, big leap, because there are certain companies there are shareholders who wants to do a kind of, venture capital business or any kind of thing, whatever, but they don't have sufficient fund to start there. But if there are shareholders who wish to invest in the business of different nature, then this kind of company provide this opportunity to these people. So it's a move in US and it is successful. So why not? We should always explore this. This is a really good move.
Does this pack make profit? Does it make profit?
Yeah, without profit, which shareholder will invest?
No, why? No, that's my question. See, SPAC is basically an interim holding company. It holds the shares for some time. It is not for all time that it holds shares. And then it is to be transferred to the ultimate buyer.
It depends, there are various formats on this SPACs. So the investor have various opportunities. So it's a welcome move. It's a different financial industry move. It should be allowed.
I think once the provisions are notified, we can then take it up as a dedicated topic to discuss.
So SPACs make profits only after they acquire the company. So once the target is actually acquired, all of it merges back. Either ways, either the SPAC would get merged or it can work both ways. So thereafter, they make the profit. And another interesting point is generally what practice is followed by SPACs is they identify either the company, like Atul sir said, they identify the company or the sector in which their target company would be, so that at least people can come and subscribe to the shares once the securities are listed.
Okay.
Please continue.
Prohibition on conversion of cooperative society into a company. Currently, 366 recognizes that cooperative societies can get converted into a company. However, the CLT recommended that there should be a prohibition on the conversion of cooperative society into a company. And the reason behind this was that the intention of the cooperative society is not to make earnings or profits, etc., which does not align with the basic concept of a company.
I think in the committee report, what they have mentioned is that cooperative banks, they get converted into a small finance bank. No? So RBI doesn't permit this because they want a new company to be formed for that, and their existing license cannot be transferred. So, but keeping in view that provision, I think this amendment is being made. But here blanket prohibition is there for all cooperative societies. I don't know why all cooperative societies are covered. Only those cooperative banks can be covered in this restriction.
Yes.
When you're talking cooperative society, they are not for the profit or something like that. But we have a Section 8 company which is not meant for profit.
Yes.
Because there are a lot of clubs which are actually incorporated as the societies. They are working it. And tomorrow they want to convert to Section 8 company. It cannot be done. Yeah, when you are talking non-profit making, Section 8 company is what? Section 8 company is specifically for charity company.
So Section 8 cannot be converted into a normal company.
No, I am talking cooperative society to Section 8 company.
Okay.
See, there are a lot of clubs which are working for the charity purposes.
Right.
Most of the clubs are all actually cooperative societies. And I know some of the clubs got converted to Section 8 company. So by this recommendation, you think those clubs have to incorporate a new company rather than getting it converted? That is the question.
Yes.
Yes.
Because, for example, I'm in Pune. The Pune club is actually in Congress society. Now they are become a Section 8 company. Now I got a boat, Royal Canal Boat Club. Boat Club is actually a society. Tomorrow, if they want to get converted to Section 8 company, if the recommendation is true, it cannot be done. Because ultimately, both are charity. I don't know. As Mr. Agrawal said, in case of the banks, yes, I agree with you.
They should not cover all cooperative societies.
Yeah.
That's why.
Actually, they've extended the RBI principle only to all cooperative societies. There's a blanket provision.
Yeah, that is
yes.
Right. Yeah. Anyway, we'll have to wait and see. Probably it may not happen. They may come out with a class of societies. That's what I think.
Yeah,
so.
they may come out with a clarification or
Yeah.
Please.
Like you said, the Class 8, Section 8 companies may also be allowed. You never know if the bill states so. Okay. The next is facilitating e-enforcement and e-adjudication. During the COVID time period, a lot of courts and tribunals have been functioning online through the electronic mode. Now they propose to have the adjudication proceedings under this act also by way of electronic mode. Through an electronic.
Very welcome. Very welcome.
Yes. However, it says that a proper trail must be maintained of the same. But however, a lot of tribunals and courts have been working for the same, so it won't be too difficult to explore this.
A good move, it would definitely help. Save time, energy, etc. Cost, especially.
And the platform is also ready, I think,
is
for this, e-adjudication platform.
Yeah, that is it.
Strict regulation of Nidhis, a proposed amendment to section 406, wherein the CLC said that stringent regulations must be implemented for Nidhis, and a special due diligence or a higher due diligence level must be ensured while a Nidhi is being incorporated. They also noted few points relating to Nidhis, wherein they stated that the growth of Nidhi companies is quite unbalanced. So in certain states, say in Kerala, etc., the number of Nidhis are actually really high in number, as opposed to a few other states where Nidhis hardly exist. So they were not quite happy with this uneven or unbalanced kind of a growth, and they also frowned upon the non-compliances made by Nidhis, that is the reason behind a stricter or a more stringent regulation of the Nidhis.
In the old act also, I think there was a provision for this notification as Nidhi by the central government. I think similar provision they are introducing in the new act. So only when the government issues notification and recognizes them as Nidhis, you can function as Nidhi. Yes.
Quite possible. A very important concept that has been now introduced, though this is stated under drafting changes that are made. However, it is quite pertinent, wherein the report has said that in the concept of wholly owned subsidiary, one member can also be allowed. So whichever is the holding company, that one member can hold all the shares of the wholly owned subsidiary. Herein, irrespective of the framework of private or public, the membership criteria or minimum membership of 2 or 7 condition is waived off, proposed to be waived off rather. So
very good.
Yes.
It was always a confusion. Very good.
Excellent.
Very welcome move.
Could it be extended to joint venture companies also, where there are 2 shareholders?
So they have proposed to do that as well, as in they want to extend it. Once this is tried and tested, they have actually noted in the report that this may be extended to the joint venture as well.
Yes. There also we have some Naam ke Vaste 4-5 shareholders.
That will be very good. That will be a very good move.
Right. But the only issue that I had is in the nomenclature. Why is this such a pertinent move in a drafting and clarificatory kind of a
Good one.
Yes. Second is sending documents to shareholders on shorter notice. They've proposed to make an amendment to section 136, which provides for the right of the members to copies of audited financial statements for all general meetings. So the proviso to this section already states that the copies may be sent at a shorter notice, but this does not distinguish between an AGM and an EGM. So now they propose to distinguish between an AGM and EGM for service of documents, and further they have recommended to allow sending of copies of these documents at a shorter notice. So 136 covers only audited financial statements. Now they want to include other relevant documents as well in this ambit. But the only issue in this is this cannot really be covered under 136, which relates only to audited financial statements. A better section to cover this would be section 100 or 101 of the Act.
Yes, section 100 needs to be amended if you want to cover EGM also.
Right.
Because these audited financial statements, they are all relevant for AGM only.
AGM only.
Yes, yes.
Probably when the amendment bill comes, they will get incorporated.
We'll get it, yeah.
Right. That's what I presume. Yeah.
Penalty under 188 is also to be included as a ground of disqualification. So as section 164 stands today, any conviction of an offense under 188 shall be a ground of disqualification. Now, since 188 itself has been decriminalized due to the 2020 amendment, they have now stated, CLC has recommended that even if a penalty is attracted under 188, that would lead to a disqualification.
But why for every director on the board? That was my question.
Sorry, I did not get you, ma'am.
Why would it be for every director on the board? Would it be for every director on the board if they are
no, if penalty is levied on you as a director, then you will be disqualified.
Anyone who is charged of penalty under 188.
Not on the all the directors.
Yeah, but see, 188 is a very, like they have specified those 8 this thing. So if the penalty is on the company, then?
No, this states specifically on the person.
On the person, not on the company.
The director would be disqualified only if he is charged of penalty under related party transactions.
Okay, that's what confused me.
No. It is only on the person, not on the company.
Because every director cannot be penalized.
No.
Or another director's offense. Okay.
Right. So it's only for the director who's particularly penalized under 188.
Ma'am, if you look at the LODR now, as per the latest amendment, it says only independent directors have to approve the related party transaction. So if you connect with these dots, then you can say that only independent directors are prone to be covered under disqualification provision.
So LODR is a different animal. It is very wide as far as related party transactions are concerned. 188 is a very small subset of that.
Yeah,
LODR covers the entire AS24, any transfer of resources and everything. So everything under the sun is getting covered. And with 1st April 2023, I don't know what that purpose and effect would have on us.
Yes.
Those kind of transactions. So I'm really frightened as a company secretary to implement those.
And what about the unlisted companies for whom LODR is not applicable? For the directors who are convicted under 188, they would also be, not convicted, penalized under 188. Would also be disqualified. Yes. Lesser penalties for certain companies. So 446B already states that lesser penalties should be implied or charged to one-person companies, small companies, startups, and producer company. This is already prevalent, or it's already there in the Companies Act. However, the current provision states that the penalty shall not be more than half of the penalty charged to the other companies, so which leaves a scope of ambiguity or rather discretionary power. Now they are proposing to state it as the penalty shall be equal to precisely the half of the penalty for other companies. So this will kind of remove the discretionary power of the adjudicator and use a one-size-fits-all kind of an approach.
You are removing the discretionary power, that's fine. But in this case, what is happening is, so right now, if suppose theoretically he can charge penalties, say from 1% to 50%. Now, after this amendment, only 50% will be charged.
Right.
So why not keep it at average level, mid level, say 25% or something like that? So that
now they've taken a flat rate.
No, here, irrespective of the, whatever the impact, whether it is minor, major, medium, whatever it is, everybody is treated as equal. Whatever it is 50%.
So instead of
whereas earlier, as Mr. Agrawal puts it, depending upon analyzing it, okay, it is a lesser impact. So let us put it only 10%, 15%, 20%. That was there. Well, that is taking away doesn't seem to be a good thing.
Yes.
Right. Yes. Okay. Any questions in this regard? Because now we've covered all the amendments, proposed amendments of the Companies Act.
I think we have covered all the questions. There was
All the questions which are appearing, which has been addressed, which has been covered. Nothing is actually pending.
there was suggestions and all that we discussed. In the last, there was more suggestions and opinion.
Okay. So now
Okay.
we move
Thanks,
on.
Nidhi, hello. Jasveen, now we are almost 1:30. So probably.
So this is the last amendment to the LLP Act, and we are then concluding.
This is the last slide.
This is the last slide. Yes.
Yeah.
There's only one amendment to the LLP Act, so we are safe there. So the concept of a producer LLP is proposed to be included. So the evolution of a producer company was, first it was a cooperative society, then in the 1956 Act there was the concept of producer company. Now they propose to introduce a concept of a producer LLP. So they have suggested that the government should come up with rules and regulations for the same. And also they've suggested the government to formulate a model agreement to be inserted in the LLP Act for producer LLP specifically. Reason is to reduce the compliance cost. As we all know, the compliance cost of an LLP is quite low as compared to a company. So small producers must be given this option, which is the reason for this amendment. Okay, so yes, ma'am.
Yeah, no, sorry, end it.
So now we'll conclude the session. This report of the Company Law Committee has been submitted to the Honorable Union Minister of the Corporate Affairs, which will be considered, and thereafter the central government would draft a bill. So we have to see what exactly they consider or what they change while drafting the bill. And this bill would be required to be passed by both houses of the parliament and receive the Honorable President of India's approval or assent before it actually gets implemented into an act. So we have a long way to go, but it's important to understand the rationale or reason behind each recommendation and amendment that comes in.
Okay, thanks.
Excellent presentation, Jasveen.
Excellent,
you wonderfully actually done a presentation. It is very good.
Yeah.
I wholeheartedly support Bala. Terrific presentation.
Because excellently you have covered each and every point, that also thoroughly with your analytical ability. Great job you have done. My great appreciation to you.
Thank you so much, sir. Thank you. Means a lot. Means a lot.
Yeah, you have done a good research. Thanks a lot for this presentation. It was in depth, very lucid manner you mentioned. And thanks all the panelists, Mr. Agrawal and Nidhi and Jasveen, Mr. Bala. Thanks a lot, all of you. Thanks for this.
And Silas Bhai always. We do not have to thank Silas Bhai.
Yeah, Silas Bhai, Pramod Bhai, and everyone.
Yeah, Pramod Bhai.
And thanks for everyone for being active participants. Keep on sharing this support.
Thanks a lot to Mehta Mehta for giving us this opportunity. Thank you very much.
It's a great platform to discuss. So and so learning, got many new points learned during this presentation.
Yeah.
Thanks to the entire team.
Thanks a lot.
Thank you so much. Thank you. Stay safe. Thank you.
Have a good weekend.
Yeah.
Bye-bye.